by the way, what's the total market cap of Bitcoin approximately right now?
Is it like
It's like
800?
700. Yeah, let's go 700-800 billion dollars, right?
Yeah.
The top 500 asset managers in the world, right? 500 people, right? Like you could probably fit 500 people into any conference room that you can find anywhere you're at, right?
Hmm.
500 people control $130 trillion. And guess who they all answer to? BlackRock, right? Just they answer to BlackRock because BlackRock is the downstream effect of this is the direction that BlackRock is moving in. So therefore, if I tell my clients to go in the direction that BlackRock is moving in, I can't be fired for that. So therefore, de facto, no matter who their boss is, the ultimate boss is still BlackRock, right? And Fidelity and all these other guys that have Bitcoin ETF applications. $130 trillion.
Mm.
If they move just 1% of that capital over the next 10 years into Bitcoin, that's double Bitcoin's market cap right now. Just
Sure.
think about that. That's double the total market cap of Bitcoin right now. It's $1.3 trillion coming in. But the problem with Bitcoin is, for all of them, is that Bitcoin has something called a multiplier effect, right? So in order to if you put $1 into Bitcoin, the market cap doesn't just go up by $1. It actually, based on Bank of America's research, goes up by $118 when the supply is really squeezed. So $1 trillion, 1% movement of that top 500 asset managers takes the market cap of Bitcoin to $100 trillion, which is roughly $4.7 million of Bitcoin. This doesn't include a single dollar coming out of any of the $330 trillion that's locked in real estate right now.
Jeez. And what about bonds? You know what I mean? Like, I mean, I think at some
Doesn't
point,
include a single penny coming out of the $120 trillion in bonds in the US.
never
This
mind the
is
negative
just,
yielding
well,
bonds
no,
there.
actually, let me correct myself. They will, because that part of that 130 trillion that is under management is in bonds, but it's not the full amount because the entire bond market is worth about that, right,
Yeah.
in the US. So yes, money will come out of bonds, will come out of equities, but it doesn't need to be much to move the price of Bitcoin to where people would just be completely and utterly blown away by it.
My God. And then, I suppose going back to where I sort of was going down this path here earlier. So we're saying, all right, we've got this weight of institutional capital that's going to be changing the culture, it's going to be driving the price exponentially higher for the coming decade. What about the idea of nation states acquiring Bitcoin as confiscation-proof savings? We saw what happened with Russia, and having their assets effectively seized, 500 billion. Is there a chance that Bitcoin self-custody would be useful for those crowds who go, hold on, we don't want the US being able to drive what we do over here. Let's
Of
take a hedge
course.
here. Yeah.
Of course, because in essence, like now, this is obviously more conspiratorial thinking. Okay. So, if I was to think about it, I could say, I could build an argument in my mind where Bitcoin is the single best way to transact in US dollars around the world without the ability for sanctions affecting it because it is an unsanctionable asset,
Mm.
right? Because let's say I'm sanctioned for doing business. Say I'm Russia and I'm sanctioned for doing business with Iran, for example, right? Well, now I have to transfer my oil to them in our currencies because there's no one that's going to do that transfer. But how do you sanction Bitcoin, right? So I can go to Iran and say, right, this is worth X amount of US dollars and still get US dollars for it. It's one way or the other, whether it's in cash or whatever else, even if it doesn't go through the banking system. But I can actually reference it in US dollars without devaluing the value of the asset. Because what they have to do with their oil is they've got to price it in rubles and then devalue it because of the currency risk that people have actually, converting their treasury into rubles to make the transaction.
Mm.
But I can just in dollars. I can reference it in dollars because there's no risk of the reference on the asset. So, again, I haven't got fixed thoughts on this, but I think it certainly turns into a way. Everything that a normal person can do, a nation state needs to do, 10 times more than any one of us would even think about doing it. So, yeah, I think a nation state, but fuck the nation states. Just it's terrifying enough just to think what happens when this capital gets unlocked Then now we're going to start thinking about nation states coming into Bitcoin. We're talking at that point, we're talking about, multi millions of dollars per Bitcoin just based on the supply constraint. Because the one thing that people don't realize is with Bitcoin, all these people tell me, oh, as Bitcoin goes up, people are going to sell. Well, if that's the case, why does the HODL rate keep going up? Right? As the price goes up, the HODL rate goes up because the sophistication of the owning improves as the price of an asset goes up. So, like, for example, when I came into the market and bought my Bitcoin from whoever I bought it from, they were trading at that time. I'm never selling. When Saylor bought his, when MicroStrategy bought their 186,000 or whatever it is Bitcoin from people that were trading in the market, they're never selling now. So the sophistication of the buyer is improving. The HODL rate is going up while the price is going up. And we're talking about $130 trillion of capital being unlocked before we start tapping into the real estate market that's out there. And now we want to talk about fucking nation states. What are we trying to do here? This is the recipe. This must be Bitcoin Viagra right here. This is what we're doing.
It is Bitcoin Viagra. So would you be so bold as to put forward like a little bit of a potential projection or price target for this cycle? What do you think the top's going to look like?
Yeah, I did a video on this, and I said I think we go without an ETF 280,000. With an ETF, I think it goes to somewhere in the region of 450,000.
Ooh-wee. And from a valuations perspective, when you're thinking about valuing Bitcoin, and when you talk to, I guess, people in TradFi or other high net worth individuals, how do you go about just providing them with a framework? Because I tend to just do the sort of, well, here's the total market cap of all store value things. What percentage of that can Bitcoin suck up? What monetary premium can it suck away from these things? So, is that how you look at it? And do you look at it in other ways too?
Yeah, that's how I look at it. You can't really look at it as a cash flow alternative right now. Once the ETF comes out, Bitcoin turns into a cash flow asset because the normal retail person doesn't know this, but an institutional person can use an ETF to generate cash flow by using the derivatives attached to the ETF, right? So a sophisticated fund can put $100 million into Bitcoin, sell some call options against it, and make 2% a month. They're making $2 million a month while owning that Bitcoin. This is just completely normal in the world that I come from, but it's not normal to the people that own real estate. You can basically generate a cash flow from holding Bitcoin as soon as it turns into an ETF. But yeah, the way that I look at it is just basically store value. I think it's the easiest way to look at it. Cash flow option is not really there right now, but the store of value is terrifying enough because think about it, what you just said, right? How much can Bitcoin take from any one of these things? The thing that you didn't mention is the fact that the US dollar is going to continue expanding, right? Your thought process in your model takes into account the fact that the US dollar stops printing, right?
Yeah,
We're not even talking about the acceleration of printing that the US is about to go through because of the amount of debt that they have already, right? It's only going to accelerate. And then what happens when a higher and higher percentage of this new capital starts coming into Bitcoin? We're not even talking about that. We're talking about the $900 trillion US gorilla just stopping and taking pieces from what's already there. We're not even talking about the next, $10 trillion that's going to be printed.
Wow. Yes, it's almost like that's the low hanging fruit. And there'll be all these other interesting sort of adoption stories and potential pathways. But fundamentally, the ETF and the weight of institutional money is what's really going to drive. And that's going to probably be the main narrative for the cycle. And then maybe there'll be interesting stuff down the track